Hey guys, we're gonna get started in a couple of minutes here. So right now we're live on Facebook, YouTube, and Instagram. If you guys have any questions, just type it in the comments and we'll make sure to answer it. Dr. Sue, how you been, sir? Haven't seen you in a while. All right, so let's go ahead and get started. So for those of you who don't know me, my name is Elbert Papa with Just Local Homes team, and I've been a licensed real estate agent for over 4 years now. I've been helping home buyers find their dream home and home sellers sell their home for top dollar. And today we're going to be talking about the Dream for All program. I'm sure you guys have heard of it, and a lot of people have been asking me about it. And I thought, what better way to answer all your questions is to get a professional in here and answer all of your questions. And to join with us today is Mr. Casey Sullivan from the Sullivan Group, Cross Country Mortgage. How you doing, Casey?
I'm doing well, Albert. How about yourself tonight?
Your mic's a little too low.
Is that better?
Still, can you guys hear Casey?
Can you hear me?
I can hear you, but the volume is a little too low.
Any suggestions on that in your system here? Give me a sec.
They said they can barely hear you.
How about that? Is that any better?
That's a lot better. Yep. Can hear you
Now
loud and clear.
1 second. Don't you love that? Let's see.
Hey, if you guys have any questions, type it in the comments. So we'll make sure to go over it. I have some prepared questions for Casey. These are the frequently asked questions or the common asked questions about this program. But if you have specific questions, just make sure to type it in the comments.
One more check, Elbert. Can you hear me well?
The one earlier was better. I could hear you a lot better, but it kind of, the volume lowered a little bit.
Is that better?
Yeah, there you go.
Okay, perfect.
Yeah. Hey,
perfect.
Casey.
Well, happy to answer any questions you have or anybody who's watching live has. But this is a great program. Obviously, you're a great realtor and can help people find homes when this program goes 100% live in California. We've got a little bit of this waiting time, which is a great time to learn about the program. It's a great time to prepare yourself so that you're ready when the program does go live. Did you have any specific questions, Albert, or do you want me to just give a quick little summary of it?
Yeah, I have some questions for you, and then we'll take it one step at a time.
Sure, absolutely.
Yeah. Well, first of all, hey, thank you for taking the time out of your busy schedule to join us with the live stream today and answer and tell us a little bit more about the program.
Absolutely. Happy to help. It's a great program to talk about.
Yeah, even after hours, you're ready to go. I like it.
That's
okay. All right. So first things first, what is the Dream for All program? Tell us what it is.
Well, it's a great name, huh? Dream for All. So it's a program from the state of California from an agency called CalHFA, HFA, if you're looking that up online, CalHFA. And it's a program that came out last year. This is phase 2 that they're rolling out. And it's set up for basically first-time home buyers to get into the, more expensive California market. It's only for the state of California. It's for people buying their primary residence. Primarily first-time home buyers is a big requirement on the program. And it really helps somebody with a much larger down payment than any other down payment assistance program offers, because they help you up to 20% of the home purchase price, which is huge, right? So I think of this, there's plenty of down payment assistance programs that we help people with, but this is like the unicorn. right? When you find it, you take a picture of it and you tell everybody you know. So this is a very unique program. It is limited, so there's a certain process we have to go through to make sure, you do the right things to, increase your odds of getting selected for the lottery, or at least to have a chance for it. And it really helps people either qualify for a higher purchase price, which is key in a lot of the affordability issues of the California, or have a lower payment. So it kind of works both. There's a lot of flexibility into it that I'm sure we'll talk about, but it's a great program to consider.
Right. So the program can help buyers with their down payment up to 20% of the purchase price, correct?
It can help with the down payment up to 20%. There's some limitations. The maximum the state will give you is $150,000.
Okay. Yeah,
so you could see that caps out at a certain price, right? But you don't have to use all of it for down payment. You can, but you can also use it towards your closing costs. So it does allow for a buyer to potentially buy with almost zero down, because the money from the state can be split between down payment and closing costs.
Oh, okay. So you could do it for both.
Yeah, so you could just, to make up a number, you could do 16% as a down payment and hold back 4% for costs. And then, you technically don't have much out of pocket outside of an appraisal and inspection. Obviously, they work with you on any initial deposits that might need to be, made on a contract. Mm-hmm. But the program can cover that.
Oh, wow. Yeah, that's really good to know.
That adds a huge flexibility, yeah.
Yeah, at first I thought it was either just help you with your down payment or your closing costs, but I didn't know you could combine it.
You can blend, yes. About 50 to 60% of the pre-approvals we're doing right now are set up that way. The other, say 40%, have saved up some money for closing costs, and they're going to apply the whole state money. Assuming they, get the voucher and win the lottery, they're going to apply it towards the down payment completely. So, some clients just aren't sure which way is the better way to do it. Maybe they have a little bit of saved, or maybe they can get some money from a family member or a 401k loan. So then we look at the, side-by-side comparison to see kind of what it does to the monthly payments based upon either having the state's money cover down payment and closing costs, or for them to bring in their own down payments. Their own closing costs.
All right. So how exactly does it work? How does the California Dream for All work in terms of the shared appreciation of the
Yeah, so that's the kicker, right? So there's no free lunch with any program. So with this program, the state will give you a dollar amount, right, for your 20%. So let's say you bought a $500,000 house. They give you 20%, so they've given you $100,000 in order to use for your down payment and your closing costs. Now that money is technically, they don't charge interest on it, but how they collect, what they need is the shared appreciation. So they give you $100,000 when you settle the loan, which we can talk about later, but when you pay it back, basically, you're going to give back the state the $100,000 they originally gave you. So you make that even, and then you're going to share with them a percentage of the appreciation. It's either 15% or 20% of the appreciation of the two big numbers that we would use there. So let's assume 20%. So let's say you bought your $500,000 house. It went up to $600,000. So you have $100,000 of property appreciation. They will take 20% of that. So they'll take 20,000 and you'll get the 80,000. And that's how you settle the loan.
That seems pretty fair to me.
Yeah, you're in business with the government, but there's just no program similar to this, right? It really can make a lift in when somebody's trying to qualify to buy a house right now.
Got it. All right. So I actually printed out the visual for that. So about what you just talked about, Casey. So if any of you guys want a copy of this, of how the program works in terms of the appreciation and how much you have to pay back if you decide to refinance or sell the home, just message me and I'll send you a copy of it.
There's a cap that they set on the appreciation, but it would be pretty hard to hit that cap. And the appreciation is normally how it's going to be set up, I think, for most people, is when you sell the house, you settle the appreciation. But there could be a scenario where you want to get out of the shared appreciation loan sooner, and you can actually, like, say, do a refinance if you had enough equity, or if you won the lottery. You could pay the state out for their portion at any point of the loan program. You don't have to wait till you sell the house.
Got it. Okay. So Sheila from Facebook has a very good question. So she asked, can the buyer combine it with gift money?
You can get some gift money. They don't allow you to invest. I think you can invest with this new program. They're limiting it to 5% of your own money that you can invest. So you can take the 20% from the state, and you can throw in an extra 5% if you got a gift from a family member. Some people, what we're doing is we're taking, during all of our pre-approvals we've been doing over the last couple of weeks, some people are taking the 20% from the state and they're putting it towards the down payment, which allows them to not have mortgage insurance. And then they're taking a gift from a family member to cover the closing costs. That's a really popular structure. And then that money can also be used for the initial deposit when you make an offer on a property. So yes, there can be definitely some mixing with gifts.
All right. What about debt to income ratio and credit score requirements? What are people looking at when?
Generally think about 45 to 50%, depending upon your credit score. So it's not super low. So it's pretty flexible there, to be in that 45 to 50%. The credit score, there's a 700 is a great number. If you get 700, that's where you get the flexibility on the debt to income. Not to get into details, but there's also the feature as it kind of branches off on the loan, where there's the standard loan and then there's one set up for lower income. And so with the lower income, you could technically get the credit score down to a 660. But if, and that's a decision we make when we're kind of going through somebody's pre-qualification or pre-approval, where they fall based upon their income and what county. But if you think about, the general terms, 660 is for the lower income, but if you can be at the 680 is great. That gets you a 45% debt to income. But if you're at 700 or above, it opens up everything to that full 50% the debt to income, for properties, for single family condos and townhouses.
What about eligibility? Like what kind of requirements do people need to have to be eligible for this program?
Yeah, so it follows your normal conventional, or what some people will call like a Fannie Mae guideline. So it's nothing out of the ordinary. Some down payment assistance programs are tighter with qualification with certain things. This one pretty much just follows your basic conventional guidelines outside of, the rules that we kind of already talked about. Mm-hmm. So we're looking at, a 2-year work history. We're looking at credit. We're looking at debts. Looking at the normal things. 2-year work history doesn't have to be perfect, but we're just looking to see what the history of there and like what somebody's making. Are they commission? Are they salary? Are they hourly? In order to determine, can they afford the repayment, over the life of the loan. There's some more unique, maybe we'll touch on it later with some of your questions, but there's some more unique guidelines of the loan around first-time home buyer being a first-generation buyer. There's some homeowner education that they have to do. So these are some of the other requirements of the program.
Yeah, I want to get into the definition of first generation borrower and first time home buyers. But Luis on Instagram has a very good question. He asked, how do you get on the wait list or apply for the loan?
Yeah, so the process is you meet with what's called, I think they call it an approved CalHFA lender, I think is what the government's calling it. For example, we are. You get pre-approved with us. We provide the consumer with a pre-approval letter. It's not a standard pre-approval letter that we would normally do. It's a special CalHFA state form. So we fill out this form, we give it to the consumer and say, congratulations, you're pre-approved, here's your proof. And then the state is going to open up a portal, like a registration system. They think it will be early April, but it's not built out yet, so it's not available yet. But when they do, we'll obviously alert the people we've pre-approved. The consumer will go in there, they'll log in, create an account, and they will upload the proof, which is the pre-approval letter that I gave, that they are pre-approved. then the state says they're going to leave that portal system open for about 25 to 30 days. So let's assume it opens in, early April. Maybe they have it open till early May. And then at that point, they're going to close it. Once they close it, then they're going to do a lottery system. They call it a voucher. Now, during those 25 to 30 days, the system's open. It doesn't matter if you register, if you're the first one that registers as soon as it opens, or you're the last one that registers. It does not make any difference of your eligibility as to will you actually get the program or not. So you just have to register. And then the state will start pulling, when they'll announce it. So let's say it's early May, they'll pull it out, and they're going to pull it by 8 geographic regions, so that there's some quote unquote fairness as to who gets the program. The last time it came out last year, more people, for example, in Sacramento County got it than per capita than the Bay Area. So now they're going to balance it out a little bit more. And then, if you win the voucher, you'll get notified that you have the voucher. You obviously want to send it to your lender. And then that's your golden ticket to go buy a house. And when you make an offer on a house, the seller, if they know you're using this program, they're going to want to make sure you have the voucher, because that's your proof that you have it.
Yeah. So if you guys heard that, that's a key thing here for this program. Casey said that it's a lottery system. So the first phase, when the Dream for All program came out, 2022, it was a first come, first serve basis. So this time it's a little different. It's going to be through a lottery system. So they're going to draw by random, right?
Yep,
who's going to be able to get the program. So,
and they're going to put together a wait list, because they know that not everybody that gets a voucher will actually buy a house or find a house that they want.
Mm-hmm.
So there will be a wait list, so if you don't win the first time, then you're just waiting around to see when the money becomes available again.
Okay, got it. Does that answer your question, Luis? Let me know. All right, so
yeah, again, you get your pre-approved with a lender like us, right? We do the math, we explain the program, we explain the payment, how it's going to look, we estimate some interest rates based upon how the program might look, and then you get the Dream for All pre-approval letter, and then you wait. So you wait for the state opens it up, you register, then you wait again, and then you hope to win the voucher.
Makes sense. So what defines? So you said that one of the eligibilities is you have to be a first generation borrower, right?
Correct. Yeah.
So how do we define that? How do we define first generation borrower?
Yeah, that's a kind of a new term in mortgage lending. Never had to deal with that before. So let's just assume there's 2 buyers on the transaction, just for this discussion. Both of them have to be first-time home buyers, which means they can't have owned in 3 years. So that's a 3-year rule. One of them has to be first generation, which means they cannot own a house in the last 7 years, plus their parents. We can get into guardians and adopted kids, but their parents cannot currently own a house, either one of them, in the United States. And if one or both of the parents are deceased, they cannot have owned a house when they died, like been an owner of a property when they passed. So that pretty much makes one person has to be a California resident, so it can't be 2 people from Florida moving here. So that's another requirement. And that's basically the general guidelines of what a first generation home buyer is with this program. So it's definitely different than we've seen before.
Yeah, that's very specific, especially with the your parents owning homes too.
Yes, right. I'm not sure why that matters. Not every family member helps their other family members, right? But in this program, this is how they're choosing to maybe limit the number of people that qualify. But again, it's your parents can't own a house now or died owning a house in the United States. So if they owned a house in another country or currently own a house in another country, that's fine. And it's just any sort of ownership interest.
Okay. So at least, from my understanding, at least one borrower has to be a first generation home buyer, right?
One of the 2, yeah.
And then all borrowers must be first time home buyers.
First time,
right?
yeah. And that means they can't have owned a house or even lived in a house that their spouse owned.
Okay. What about
For 3
income?
years.
What about income limits?
Yeah, so that's a good one. So that's going to be based upon the county in which they're going to buy the house. So when we pre-approve somebody, we have to pick a county. Like, let's say somebody says they're going to buy a house in Contra Costa County. So we'll use that county limits. We'll pre-approve them. They'll go into the portal system with the state. They'll get the voucher, but they're not limited to the county that we used during the pre-approval for the income. They can change. Maybe they end up wanting to buy in Solano County. That's fine as long as they still fit within the income requirements of that county. Now, you wonder, like, what are the income requirements? So the state is pretty big, and there's varied diversity of income amongst the state. So the lowest counties is $132,000. The highest counties is $287,000 of combined income for all buyers of the property, all the people that will be on the loan. So you can't make more than that. Now, if you think like I'm sitting in Contra Costa County right now. So that's 234,000 is Contra Costa County. If you look at the general, like San Francisco Bay Area, like Alameda is $234,000. So you'll think that's it. The highest county, you want to guess?
San Francisco.
No, I thought it would be that too, but it's Santa Clara is 287,000. San Francisco's 277, so it's really close. You were only $10,000 off. So
how much was
second prize? What's that?
How much is the limit for Santa Clara?
287.
Oh, okay.
Yeah, versus 277. So it's awfully close. If we pick like one of the lower counties would be, let's look at Fresno County, 132. San Joaquin County, like out in the Stockton area, that is 158,000. So you'll see some variation as it goes. So it's something that's easily found online, but otherwise when we go through a pre-approval, we just check to see kind of what counties the person might be considering, if they're considering different counties, just to make sure they qualify for all of the income limits.
Okay, so yeah, so anybody that's interested in applying just needs to make sure that they're within that income limit.
Correct, for the county they want to buy in. And they don't have to pick a county like forever. They can just get pre-approved for a certain county, but they can switch as long as they're within the right income limits. And that's important. We want to make sure it doesn't change. Yeah,
so Kim Duran from YouTube, she has a question. She's asking, how many potential winners will there be?
Yeah, it's hard to say because we don't know, they have a certain allocation of 300 billion, I believe is the number. I think there's a little bit of leftover from the last phase one from last year that they're going to roll into it. But a couple estimates I've heard is always been in like the mid 2000 range. So call it 2,200, 2,500, somewhere around there. It'll depend on how many people in, say, the San Francisco Bay Area and LA and Orange County are going to go in because they're going to ask for more money.
Okay. I know from the first phase, there was $300 million, right? Set aside?
The first one was 500.
Oh, wow. Okay. 500. Yeah. And then, did you know how many applicants were there for the first phase?
It was a different process, right? Like we had dozens of people pre-approved all on this crazy, rat race to try to find a house. So that was never public because it didn't go through the registration process. But how many people ended up using it? I don't remember the number. Yeah.
Okay. And
then, I want to say it was in the 2000s. Because at that point it was 20%. Now it's 20%, but not more than 150,000. So there is some limitations there on how much you can get.
Okay. And for this time, when it comes out, it's going to be 250 million. Is that right?
It's 300 million is what the allocation was, but I think there's going to be a certain amount that I'm hearing that they're going to roll over that wasn't used the first time, because people would secure it last time and they ran out of money, but not everybody closed escrow, so there was some fallout of escrows, and so that money became available. So if we use 300 million this time and we say everybody's going to max it out at 150,000, which is the maximum they'll give you, that's 2,000 households. Now we know everybody's not going to max it out. So,
Right.
kind of the minimum is 2,000, not including whatever was residual from the last phase. So it will be over 2,000. We just don't know how many more. And we don't know how many people are going to register. I assume if there's just a huge amount that register, hopefully that gets attention from the state that maybe they'll give us more funding and not make us wait another year.
Yeah. So I think you went over this already, but Mrs. V from Instagram was asking, when's the last day to apply for this program?
Well, the last day to apply with a mortgage lender, there isn't particularly a date. What you want to do is, what's the last day to register with the state to make sure you get pulled into the lottery. And so they say it'll be about 25 to 30 days after they open up the window, the registration in early April. So, if I was doing, I'd say like be ready by April with your pre-approval letter, early April, but technically you could probably bleed until the end of April and still be safe. But I would say April sometime. And a mortgage lender, they could take, depends on the mortgage lender, they could take a day or two to pre-approve you to maybe a week, so plan ahead once you give them your documentation. A documentation or, pay stubs, W-2s, bank statements.
Yeah, it depends on how fast your mortgage lender is, right?
Correct. And with this, because the timing is so long, you want to make sure you're getting a soft credit check. You don't want a hard credit check. Hard credit check will expire. So you may have to have your credit run again, by the time the lottery is done and by the time you're out shopping. So, what we do is we do a soft credit check. So there's nothing that hits in order to get them pre-approved for this program.
And I believe one of the requirements that they require for the borrowers is there's also a home buyer education program that they need to finish. Is that right?
Yeah, there is. There's kind of two actually on this one, so you get an extra one. Yeah, the first one is the more standard one. The CalHFA, they have other programs besides Dream for All. This is just their unicorn program that we mentioned. But on the other programs, there is one. I believe it's an 8-hour. You can kind of do it yourself on your computer. You can also do it in person if that's what you wanted, but most people do it on their computer. And then they add on an additional class. It's called a 1-hour class. Obviously you get to go through it as fast as you want. And, you had held up that infographic about, how the shared appreciation works. So they go through that. They really want you to understand the uniqueness of buying with this shared appreciation loan, how it works, what are some examples, how to pay them back. So it's all around the feature of the shared appreciation. And that class, that's a free class. It can be taken at any point. Once you take it, it's good for a year. And both classes only have to be taken by one of the borrowers in case there's, if there's two buyers on the property, only one of them has to take it. So I guess you can, take dibs on who wants to take it.
Yeah, I didn't know that part. Yeah. Only one of them needs to take it.
Yep.
And I think you guys have any more questions for Casey? Yeah, so just a quick recap here. So the program offers up to 20% down payment for down payment or closing cost, not to exceed $150,000. The home buyer or the borrower, you have to register for a voucher. And a key highlight for this one is it's not going to be a first come first serve type of loan. It's going to be a randomized drawing. That's going to be that's how they're going to select the registrant. And eligibility, one borrower has to be a first generation home buyer, and all borrowers have to be first time home buyers. And income limits, you have to be within a certain amount within the area median income, I believe, right? Whichever county you're in. Message me or Casey if you guys want to know what that is. And next steps would be to make sure that you get a hold of somebody that is a CalHFA approved lender, like Casey, to get your pre-approval, because it's not just any like regular pre-approval letter, right? It has to be from a CalHFA approved lender.
Yep, on a special letterhead from the state of California.
Yeah, so make sure you work with your loan officer to determine that. And then can they take the home buyer education program now or whenever they want?
They could. You don't need it until after you're in contract and we're going in for like the final state approval. So I sure want it. I think if it was me and I won the voucher, I won the lottery, that's when I would take it, because then you're out shopping, so you can then be doing that at the same time. But I wouldn't do it until I won personally. That's my belief on it. Yeah, unless you're just a sucker for taking the class.
Hey, I would do it. I mean, I kind of already know how it works, but if I was a borrower, I would take it anyway, just to
if somebody wanted to take one of the two classes, the one that's specific to the Dream for All might be good because it's a shorter class and it's talking about the program. The longer class, that one has nothing to do with Dream for All. That's like just basic home buyer education. So if you're really looking to learn more about this program, that 1 hour free class is a good thing to take.
Got it. Okay.
Yeah. And again, it lasts. It's the voucher. Once you get the certificate, it's good for 1 year. So that would give you plenty of time, since the program will have fully run its course by that point.
That's pretty much all the questions I have for you now. We kind of went over our time. I told you that we were going to be here for about 15 minutes, but we went
a little longer. Well, let's wrap up by saying this reminds me, if you've ever seen the movie The Willy Wonka, where they like look for the golden ticket in the candy bar. So this is a little bit like that. So, kind of get ready for it, get your ducks in a row. And then, Elbert, as you'll know, as a realtor, once the vouchers start coming in May, certain price points in our real estate, community it's going to get hit. There's going to be a lot of people wanting to use this money pretty fast. So, there's probably some pre-work you could do, kind of understanding neighborhoods, with you, Elbert. They can talk to you and say, okay, I submitted it, but let's start thinking about where I want to buy, so that you're ready when you get the voucher. And then also, if you don't get the voucher, like what other programs does the state or other housing agencies offer? Just so you have a backup plan in case, you get some bad news or you're on the wait list waiting. So we look at that for clients as well, just so they can see other alternatives.
Yeah, definitely, because there's a lot more programs that the state offers besides this one, right?
Right. Yep.
Okay. Yeah, I think that's all we have for now. Hey, Casey, I appreciate you.
Yeah, good job bringing this live. It was very helpful to have many people out there.
Yeah, and I'm planning on going live at least once a month. So if you guys have any ideas or any specific topics you want to go into, send me a message and I'll make sure to go over that specific topic that you're interested in. Anything else you want to add, Casey, before we end the live stream here?
No, but thanks for bringing this live with everyone. Good job.
Hey, I appreciate you coming.
Yep.
All right, have a good night.
Albert. Okay, bye-bye.
Bye.